All right, welcome back to Alpha Hunters. The markets are closed for the week of May the 3rd. So happy May the 4th to all of you. May the 4th be with you for tomorrow. Yeah. Let's see what went on this week because we did have a pretty busy week as far as like market price action. So let's just kind of go through what went on. So Monday, a little bit of a gap up, looking pretty good there. Sideways day. For the most part, trading, though not too much kind of going on there on Monday. Tuesday, a little bit of a gap down, nice little rollover as the day went on. You can see a nice little drop there. Tuesday, end of day. That's when we got Amazon earnings, also Tuesday, end of day. And Amazon did okay. They basically they beat numbers, but like Microsoft, Alphabet, and Meta before them, they've also said, hey, we're spending a lot on AI, and that's also what the numbers showed. But they did pretty well as far as like revenue and earnings, but they just have a lot of capital expenditures in the AI area. Nice little gap down there on Wednesday. And it's basically just sideways. We were just waiting for the Fed. And obviously, you can see this huge pump. This is where the Fed, we got the hold we were all expecting. Nothing too, shocking there. Apparently, there was a question asked about, possibility of rate hikes. And he basically said, no, there's no possibility of that. So, yeah, there you go. Market sold back off towards the end of the day. So no possibility of rate hikes. And it's just kind of interesting why he would say there's no possibility. Do they know of some issue coming down the line that he doesn't want to spook the markets for whatever reason? I don't know. Maybe it's possible. Thursday morning, though, nice little gap up here. Sailed down, broke the Wednesday's lows, and then we kind of started to bounce a little bit. We kind of nice little bounce, consolidated, and then we bounced as we went to the end of the day on Thursday. That's when we got AAPL earnings. We got Apple earnings. So their earnings was kind of mixed in my opinion. They stock traded pretty well. They were up for the most part like 7% on the day on Friday, and they beat on revenue. They beat on earnings, but they missed on, or they had declining growth on iPhone revenue. They also had declining growth on iPad and wearables revenue, but they did have services revenue growing. So be curious to see what they say at their AI event that they're going to have, I believe, next month. And I wouldn't really probably be willing to touch AAPL until you probably get to that event. But other than that, nice little gap up here on Friday. We also got jobs data Friday morning, and that probably helped lift up the market because it definitely did pre-market, along with AAPL earnings from Thursday night. And yeah, nice little pullback to start the day. First hour and a half, then slow rally, very, very slow rally. Got back kind of towards those highs of the morning. Didn't quite get there, but up in that general area there for the day. So yeah, it's that was kind of the way the week went. We got pretty good amount of news throughout the week, but the way the market ended the week with the market reaction to the jobs report, which the jobs report that we got Friday morning was not exactly great. It really wasn't great at all. It was really bad for the economy, but yields and dollar, which have been putting pressure on the market, dropped off quite substantially, which is one reason why the market rallied. The market was really liking that, wow, the economy's not doing so great. So, think about that. The market is now bullish when the economy's not doing good. Well, what's going to happen when the economy continues to do bad? Is the market going to be bullish then? Yeah, probably not, but time will tell. All right, taking a look here at sector rotation for the week. Well, we can see the biggest lagger, energies. Energies basically the whole week, except for Monday, not doing well. Not doing well. They had a pretty large breakdown on commodities on Wednesday. On Wednesday, May the 1st. And yeah, just never really recovered from that. So you can see as the market was rallying Thursday and Friday, energies didn't get any of that rally really at all. Also, financials underperformed, materials, industrials, communications, staples all underperforming. Just barely outperforming healthcare, discretionaries outperformed, tech outperformed, real estate outperformed, and utilities, shocking, the biggest outperformer for the week. And you can see XLK here, tech, we had some tech earnings on Friday's performance. You can see this underperforming as we went into AAPL earnings there Thursday at the end of the day. So Apple really helped lift up the XLK there in tech world. And Amazon there in the XLY discretionaries, you can see bouncing pretty good there. All right, take a look at the VIX. Well, it's basically been 2 weeks now that we've seen the VIX just absolutely drop off here, back down to where we kind of started April, or at least getting below the starting point for April. So there you go. We have dropped off quite substantially. We're not even back to all-time highs yet, but the fear has been leaving the market. The DXY, the dollar. Let's talk about the dollar. We'll talk about yields as well. We'll talk a little bit more about both of these. But dollar, yeah, the way it ended last week, it's looking pretty good. Expected a continuation higher. We got a little bit of that, right? We got a little bit of that into Wednesday, right? And then we saw DXY kind of reverse, had this engulfing kind of candle here on Wednesday. And it was kind of interesting because most of this drawdown here, or a lot of it, was Wednesday after the stock market even closed, which was really interesting. But yeah, you can see that we had a kind of a bearish engulfing, so then we just continued to drop off there Thursday, Friday. But what was interesting about Friday was how much it dropped on Friday with that jobs data Friday morning, and it dropped and bounced. It bounced pretty good lower wick there, and it came into these double highs, or at least it at least held these highs by close on Friday. So kind of an interesting one. Could be choppy in here for a bit, but if it consolidates sideways and doesn't continue to break down, we could see this thing push back higher. But for now, probably just gonna be choppy. Maybe consolidate. We did have 3 back-to-back-to-back breakdown days that were pretty strong, so I'd expect at least some kind of consolidation here. Maybe it does continue down, but if it does break Friday's low, yeah, I would definitely be expecting this to continue to roll down. The GLD and the gold trust here. Okay, so with how much the dollar, the DXY, dropped off there Wednesday, Thursday, Friday, gold didn't rally. Gold's probably just in a consolidation, probably just going to be a basing. This might go on for several weeks, might not pull down much more aggressively, might just be in a slow kind of basing out here. I would just continue to layer in 2 positions on any kind of pullbacks and sideways movements, and second half of the year probably would set up pretty strong for gold. All right, take a look at the yields. Like we talked about the dollar. Yeah, yields are in an interesting spot. Mostly here on the 10-year. The 30-year looks a little bit more bullish. But we did have that breakdown on yields, right? But we did come down. We tested into this high that we never did before, and we're kind of retesting into the lower ends of the channel. So we did have a little bit of a bounce from the lows, kind of like the DXY did. Not as strong, though. And it'd be interesting to see what happens, okay? The next data point I'm really going to be looking for as far as economic data is going to be on the side of inflation. I believe the next data point we should get is CPI. I looked earlier. I didn't really see it on the calendar for next week, but typically it should be next week, or maybe it'll be the week after. But whichever inflation data we get, if it starts to come in and continues to come in higher than expected, or inflation continues to, move in a more inflationary type of movement or metric, that would indicate to me that the Fed has a real massive problem. The one that we've talked about for a while, where what if we do see unemployment tick higher and inflation continues to go higher, right? We've talked about that scenario. That would be a disaster for the market. You would see yields pop pretty strong. I think it would be a very strong pop. And I mean, the market definitely probably wouldn't take it well, no matter which way yields kind of went, but we'll see which way that kind of happens. But that's the next thing I will be looking for, as we got very weak jobs data Friday morning. And taking a look at this 30-year, you can see we did have a breakdown on the 30-year, but it doesn't look nearly as bad. We didn't break this low from April 19th. So it's the long terms, the longer end of the yield curve that looks much more promising if you're expecting yields to go higher, or if you're playing any kind of instrument where you think yields will go higher. The longer term looks much more promising in that regard. All right, take a look at the 10 and 2 inversion. We definitely did continue a little bit more of that uptrend. Monday, we had a little bit of a pullback, but Tuesday, Wednesday, Thursday, and even early Friday, we continued to move higher. We did pull down a little bit there towards the end of the day on the 10 and 2 inversion on Friday. HYG, high yield corporate bonds. Well, we definitely did get above these lows of the support and resistance level back over here. We were definitely smacking our head on that for about the past 2-3 weeks. What's going to happen now? Well, that's a great question. I mean, we're just back into this consolidation range. I mean, we can very clearly just roll back down, which if yields don't really hold the breakdown that we had on Friday, and maybe they start to, yields start to go higher Monday, Tuesday, and early parts of this next week, then yeah, we'll probably just see bonds drop off again. And that even goes for the LQD. The LQD had a nice little gap up here. Nice little sideways consolidation here over the past couple of weeks. But I mean, all we kind of did on Friday was bounce right into these lows that we had put in over the past like 2-3 months, and that's exactly where we kind of rejected. So got a nice little doji there on Friday. It'd be interesting to see what we get coming early this next week. Man, it's a really tough one. And take a look here at the TLT. Yeah, we did bounce a little bit more into this down trending channel. So maybe we do go a little bit higher. We got a little bit of a lower wick there on Friday. So maybe bonds do pull down a little bit more. We'll see TLT go a little bit higher. But, we're going to have a lot of resistance up above us here on the TLT, which, we'll see what happens later on. But there will be definitely resistance there at those levels now. All right, take a look at that RSP. Let's take a look and see what exactly we got going on across these 5 major ETF markets. RSP is kind of an interesting one because we didn't really break the highs that we had from Monday, which kind of an interesting kind of spot here because, I mean, we got up to that level early Monday from kind of the gap up and run that we had. And it's kind of where we failed and rejected right on Tuesday. So it's like right into this low that we had back from mid-March. And it's kind of where we got to on Friday, and we didn't hold or try to push through it. We just kind of failed there. And the RSP kind of traded to that level like right away on Friday. So kind of an interesting spot that don't really know if I would want to be bullish. But the main point I would say right here, right now on the market is you could definitely set up bullish and bearish trades because I feel like we're kind of in the middle spot where I could definitely see us roll over. I could definitely see us continue to rally as people try to continue to come in and buy the dip. We do have lighter green volume over those green days. We had more red volume over those red days. So yeah, I mean, I can make the case bullish or bearish either way. The one thing I would say for any one of these 5 is, you can just say, all right, I'll have a stop loss down here on it. If we go bullish, I'll have a stop loss down there. If we go bearish, I'll just have a stop loss maybe up here above this April 9th candle, right? Or something like that. And that way, you know what? You got some protection either way, whichever way it goes. And then you say, hey, if it goes bullish, I'll take it off if we cross over, or take off the bearish one if we cross over to the upside. If we go bearish, I'll take off the bullish one and just ride the bearish one. If we do break down this Thursday candle, I would expect the market would be going lower no matter what. Even this low that we had kind of towards the middle of April, I don't think that would hold. The DIA looks a little bit stronger, right? Kind of have like a little double bottom action here, getting above on a gap up this high that we had from April 23rd, 24th. And we kind of just retested right into those highs on the gap up and just pulled back and bounced. So it doesn't look too bad. So if we don't roll over Monday or Tuesday or sometime soon, yeah, I can see the DIA kind of consolidate here and maybe just continue to ride it bullish. The IWM had a pretty good day on Friday. Nice little gap up here, but it definitely had more of the bearish activity intraday. You can see nice little fuller body sell down there intraday. So it didn't hold as much. Definitely didn't get as much as that afternoon rally. Didn't hold it as much. So it's kind of an interesting spot as well because, you get these lows. I really kind of thought this would be the spot where it would have a really hard time. And it did have a hard time. And we kind of got to that, this level like 3 times and rejected. So yeah, maybe we come a little bit lower, retest into the highs over the past 2-3 weeks, and then maybe we bounce. That could be a pretty good scenario there on the IWM, but a lot of these look pretty good to play it either way. The Qs had a huge gap and was up pretty good there on Friday. We did get into these lows. These were the lows I was really kind of looking for over the past couple of weeks. I thought we were going to get there Monday, Tuesday with that Monday move. I was like, oh man, we'll probably get there pretty quick, but we didn't. We actually wound up rolling back down all the way into Thursday, but we made a pretty good run Thursday, Friday. So we are in those levels. This is why I was kind of alluding to when we're looking at the RSP, I could play it either way because we definitely bounced pretty solidly. Big tech earnings is over, so those catalysts are gone. And over the past 2 weeks, this is kind of all we've done. We've just kind of retested higher from that breakdown that we had kind of in the middle part of April. So yeah, I mean, I can play it either way. Just have your stop losses set above or below some major resistance support levels, and I think you'd be okay. I don't really think you'd want to be in any way particularly heavy or leveraged. Even if we do try to go bullish here on the market. If economic data continues to come out as weak as it was Friday morning, I don't know if that's going to be a really great bullish signal, and might be just a great time to continue to sell positions into any kind of strength. As far as the SPY here, it kind of made the same move that the Qs did, got above that Monday high, got right into that low on April 4th. That is the one spot there I was kind of looking for on a retest. Did the Qs? Yeah, the Qs got into that low as well. So that was the low I was really kind of looking for there on the SPYs, right into that low that we had on April 4th. Maybe we go a little bit higher because we didn't quite get there, but I mean, we really got close to it. So yeah, that might be it. I wouldn't expect a lot, but if we continue to go higher, all right, I mean, we'll go higher, but I would just continue to sell some positions because economic data continues to show us that we have unemployment continuing to rise. Interest rates are at levels that we haven't seen in definitely over like 10 years, maybe 15 years. So as those issues continue to percolate, if investors don't like where the U.S. debt to GDP is, they'll continue to close out and sell bonds, which will continue to push interest rate and yields higher. And that doesn't sound like a very great scenario to be in. Alpha Hunters, have a great weekend. May the 4th be with you tomorrow or today if you're watching this, because you will be watching this, or it will go live on Saturday. So have a great weekend and take care.